Bill, what did you make of that performance in that news conference?
I think your interpretation is exactly right. It was quite dovish. I mean, he basically said that despite the news that's come in, economy stronger than expected, inflation not so good in the first 3 months of the year, the whole game plan is basically unchanged. We're going to keep rates here until we're highly confident that we're going to get inflation down to 2%. No hint whatsoever of a rate hike. No hint that it's not going to work. So market reaction, I think, was pretty appropriate given what he said. He basically said, we've got it.
Back to Dudley McKelvey of a few years ago. Bill Dudley, you're in the trenches at Goldman Sachs gaming the labor economy. What data in the labor economy is important to Chairman Powell to really become accommodative?
Well, I think it's the notion that the labor market is really starting to somehow fall apart, and the unemployment rate is starting to rise significantly. He was asked pretty explicitly about that, and he basically said 1 or 2% rise in the unemployment rate wouldn't really disturb him. I think the interesting question is, if the labor market really starts to deteriorate, the problem is that the next stop typically is a recession. We've never had a 0.5% rise in the unemployment rate without having a recession. So I think it's, if the unemployment rate goes up a couple tenths, I don't think it really bothers them. But if it feels like the labor market is really giving way, then the Fed will put a lot of weight on that, almost regardless of what inflation's doing.
Bill, you said something. He basically said, we got it. The playbook hasn't changed. Was that the right move?
Well, time will tell if the playbook will actually work as well as he thinks. I mean, my own personal view is that the legs of monetary policy probably are not as long and variable as he thinks. And I put a lot more weight on financial conditions, I think, than he is currently. The fact that people are taking his comments in a very positive way from a financial market perspective means that we're having an easing of financial conditions, which will support the economy. So I think it just reinforces the higher for longer story over the medium term.
He doesn't seem perturbed about that. And he also didn't really deal with a lot of the fundamental questions, as we were just saying, that have been dividing Wall Street. Didn't address the higher terminal rate. He didn't address this question of what would make him really second guess the whole idea of restrictiveness or long and variable lags. Do you think that means he's not thinking about it, or that he has rejected it? Or do you think he just doesn't want to deal with it in the public right now?
I think he's certainly thinking about it, but I think he's basically saying, from his perspective, the evidence hasn't convinced him that they're on the wrong track. So he thinks policy is restrictive, sufficiently restrictive to do the job. So maybe R-star, maybe the neutral rate is a little bit higher, but it's not as high as where they are today. So yes, could R-star be revised up at the next June summary of economic projections? Probably will be revised up a bit. But policy, in his mind, is still sufficiently tight that he's not worried about that particular variable.
Bill Dudley, Ethan Harris has been on fire, retired from Bank of America, out almost daily on LinkedIn with really intelligent work on trimmed inflation means. Which inflation statistic is most informative now to our audience?
Well, I like to focus on services ex housing for two reasons. Number one, this is the problem where the wage inflation drives the actual outcome in terms of services inflation. And number two, it's not being bounced around by the supply chain normalization process, which is pulling down goods prices. I think one of the things that's probably distorting the inflation news recently is the fact that goods prices came down a lot because of the normalization of supply chains. But if we ignore the transitory inflation on the way up, we also have to ignore it on the way down. So we don't want to overstate that goods price inflation weakness. So I think services sector ex housing is probably a really important thing to focus on, and that's the so-called last mile of inflation, and that's the part that's turning out to be more difficult.
Bill, we need to talk to you about the balance sheet as well. So the Federal Reserve announcing today they'll slow the pace of balance sheet runoff starting in June. The central bank to lower the Treasury runoff cap to 25 billion from 60 billion. Bill, market participants right now trying to work out, OK, if QT wasn't bearish, is tapering QT bullish? Bill, can you help me understand? Because we were told it's like watching paint dry. It has been. When they start to undo it, unwind some of it, what does it all mean?
I think it is like watching paint dry. You can see that in the press conference today. There were virtually no questions about the balance sheet. And he made it very clear that the balance sheet decisions are not a part of the monetary policy process of making policy either easier or tighter. I don't think it has much effect, the taper, because the destination is the same. The Fed's going to a balance sheet size that generates reserves that are ample but not abundant like they are today. So we may get there slightly over a longer period of time because we're now running off securities at a somewhat slow pace, but we're going to the same place. And so it really has virtually no market implications.
If you were on the Fed, Stub Bill, would you have voted for this type of thing? Or would you have erred a little bit more, as you were talking about before, about financial conditions easing too much to allow inflation to stay sticky for too long?
I don't think we're at this stage where, rate hikes are warranted. And so I would have agreed with the decision today. I think where I would have maybe differed from Chair Powell a little bit is I would just be a little bit more cautious about the confidence that he's got it.